I wanted to focus specifically on the strategy as well. Quite a significant update this quarter. The company also announcing it's going to be consolidating US operations under JSW Netherlands now. So I'm curious to understand the rationale behind that, what's the upside for the business, but also at the same time, is it fair to say that JSW's US business is also now really under pressure as a result of the Trump administration's latest tariffs?
So this consolidation is just a simplification of the structure which we have in US. We had two different entities controlling two different assets in US. We are just trying to simplify that into one structure. As far as the US operations are concerned, I think the domestic market in US over the last few months has improved. So therefore, the US operations have also started yielding actually better profitability. Going into the next year, we see that the volumes in US would be driven by domestic demand, and that should basically be a tailwind. The tariffs in US have supported the pricing in US, and that should be a tailwind for the US business as well.
Okay, so these tariffs are actually a tailwind. As I understand it, you have facilities in Texas and in Ohio. So what's the actual exposure for the business today? And can you expand on why you think tariffs are actually benefiting the business, not being a negative input or impact here?
So two things, Dan. One is the US business, after the tariffs were announced, the prices in the US markets went up, and that was positive for the business. If you look at our overall operations as a percentage, our international operations are not too much. It's about 3% of our overall revenues. If you look at the exports from India or from elsewhere into the United States, naturally that has been impacted. And we do look forward to some rationalization on the tariffs as we go ahead into the discussion between India and US, which is ongoing.
Expand on that for me, some rationalization of these tariffs. What is your message to Washington? Do you think Indian steel should be treated differently under current trade rules?
So under Section 232 now, we have a 50% duty on steel across the world. India is also among that. We do look forward to seeing some rationalization. We had earlier a lower duty on the steel and aluminium. I think we would see probably some lower duty as the discussions conclude. That's something which we needs to be watched. But as a percentage of the exports, as far as JSW Steel is concerned, our exports into the world is only 10% of our overall volumes. 90% is based in India. Out of this 10% which goes to the world, a fraction is only to the US. So our impact directly on steel exports to the US is very limited.
Can I ask then, given the trade and tariff agenda that we see coming out of this White House, are you still committed long-term to those US operations? Because others have suggested that this, of course, clouds the business outlook. It makes doing business a lot harder, more complex, more expensive in the United States. Does any of this make you pause for thought or want to reconsider those US investments, or are you still committed long-term?
So we are committed long-term, Dan. These fluctuations is something which we have to watch and take cognizance of, but I'm sure they will move into a more positive territory. As far as our operations in Baytown, in Texas and Ohio is concerned, we are there for the long term. We have actually invested some upgradation of capacities at both the assets, which are coming on stream in the next year. And that should be a positive for us to bring various products into the US market, which are required for oil and gas and for wind and etc. So we are there for the long term, and I do not see that focus of JSW Steel changing because of any tariffs which have been imposed in the United States.